Good morning. It is Monday, October 24th, 7:21 a.m. here for the pre-market analysis and trade ideas video. Now, looking at the economic calendar, we had some data overnight in the Eurozone and in the UK. PMI data came out terrible for both Euro and the pound here, just showing signs of the recession taking a hit in the global economy here, with the actual data coming out worse than forecast across the board, except for the services PMI let's redo that here. Services PMI hit the forecast, but it is below previous, and the rest of the numbers here in the Eurozone actual hit below forecast and below previous. Here in the UK, same thing. Everything was just terrible data. Lower than forecast, lower than previous. Not looking good for the PMI data, showing signs of recession. Over the New York session now, we have some US PMI here that I'll be looking closely. They're looking at similar, forecasting lower numbers, so we'll see if we're in line with the rest of, if the US is in line with the Euro and the UK, where we may see some bad data in the US as well. If we see the US comes out higher than forecast, well, that's going to be, that beat in expectations is going to have a positive impact on investor sentiment. Well, actually, when I say positive impact on investor sentiment, that's going to actually have a negative impact on the US 30, the US 500, and stock markets, US stock markets, because of the unique situation that we are in financially. Because a strong economy means that the Fed could keep raising rates aggressively, because the number one priority for the Federal Reserve and central banks globally is to fight inflation. So if the PMI data comes out higher than expected, well, that means that the economy is strong, and that gives the green light for the Federal Reserve to raise interest rates, which means the dollar index here is going to go bullish, which means in the opposite sense, again, stock markets are bearish. Now, the opposite is true as well, as if the PMI data comes out negative, worse than expected, well, it's going to have the opposite effect, negative US dollar short term and positive stock markets here. So be watching out for that. That data is coming out at 9:45. And the CAD data usually doesn't have any impact on the markets, as it's just the Canadian economy. It's not as important. Now, looking at the investor sentiment across the board here. So, looking at the VIX, we are maintaining this bearish channel where we're just getting a little bit softer. On the VIX, we had a little bit of a spike up to start the week, but we're maintaining this this level in the market, right? So we're maintaining bearish structure on the VIX, and that's showing on the US 500 stock markets here, where we're entering some sort of bear market rally. But for now, we're not breaking bearish structure, as when we came in to print these new lows, we had the high inflation reading and then the liquidity grab, and then buyers step in, sellers take profit, and as expected, we entered this pullback phase here, creating some higher highs and higher lows. Now, just recently printed a new higher high again. However, we're rejecting these previous important levels in the market around 3,800, which is my 4-hour supply level, and rejecting for the time being. So we're rejecting the zone, but we are also maintaining this bullish structure above 37.20, 37.30, and starting to see some support here. So as long as we stay within these two key levels here, it's maintaining the bullish sentiment short term, but it's also maintaining the bearish overall structure. So that means we may see a little bit of indecision. To see more clear sentiment now, I'd like to see either stock markets break these previous levels and start creating some support above this zone. Then we could see a continuation of this pullback, and then potentially get some better sell areas at the next key level here, 38.82. Or if we just fail to break here and start creating this double top and then come back below 37.20, then that's showing signs of this pullback fading out and the buyers exhausting and the sellers coming back into the market here and pushing the stock markets back potentially to the lows here. So again, between this range, we are quite indecisive between bears and bulls. Now, a break above would be a clear sign of further pullback, and a break below would be a better sign of resuming the trend. Now, the US dollar as well is quite indecisive within the range between 111.75 and 113.5, where the entirety of last week and part of the week before, we've just been ranging in between these two levels here. And even on Friday, we had a wild day where we had an attempt to break out of this market, out of this range here. But right at this previous sell side liquidity level, we had a number of fundamental events and currency interventions where foreign governments were actually selling their US dollar reserves, and we saw the big spike down. However, this spike down, even with China and Japan selling US dollars, billions and billions of dollars worth of US dollars to try to prop their own local currencies, the US dollar is way too strong. It just takes the punch and holds the bullish structure level around 111.75, bottom of this range, and now we're pulling back up. So for the time being, that those currency interventions are not holding as much weight as the overall macro sentiment of these aggressive rate hikes, and the demand for the US dollar maintains its strength over some short-term currency interventions. So as long as the US dollar stays above 111, even if we come a little bit deeper and then come back down to 110, this is still extremely bullish in my opinion, as we are in a overall very strong higher time frame trend. If I go back down to the back up to the daily time frame, look at this structure. Look how high and how aggressive we've been climbing on the US dollar. We're all the way up here near the highs here. So even if we come down, like I said, to 110, this is retesting previous weekly structure, daily structure, higher time frame bullish structure. So there'll be, if we come back down to this level, I anticipate the demand for US dollar is going to be through the roof, and we're going to get that leg up at these low prices for the US dollar, given that inflation is still way too high. The Federal Reserve has not changed at all their rhetoric and their sentiment, saying that inflation must come back down to 2%, and they're going to raise rates, and they're going to keep them high, and they're going to wait to see inflation come down. And inflation's still extremely high. The last reading came higher than expected, so there's no fundamental changes to me to show that the US dollar is going to reverse course here, fundamentally or technically. Still extremely bullish. So having said that, I'm still maintaining that overall bias. Now, structure-wise, we still need to be wary that we are still maintaining secondary phases of market where we're pulling back. We got a little bit of short-term weakness on the US dollar. not as prominent here as I said. We're maintaining the structure here, so U.S. dollar strength is coming back to the table. We can see this continue to retest, potentially these candle bodies here from Friday, and eventually back to the top of the range here. But equities are stronger across the board. Looking at global equities here, US 30, US 500, and US 100, all in the green here. Now, it's important to note here, I've been noticing this, that when the US 100 lags its counterparts here, the S&P and the Dow Jones, when this is lower than when the rest, when usually on strong days this is higher than the rest, this is the strongest, most volatile. So when the bull market is real, so to speak, when the bull market is real, the NASDAQ, the US 100, leads the way, right? The growth companies within the NASDAQ leads the way. But I've noticed on days that we could potentially have a reversal and you see the stocks may close down for the day, the NASDAQ is actually lagging. So I'm going to notice that today. We'll see if this is showing signs of weakness, in my opinion. Even if the pre-markets are up, this is showing signs of weakness. UK 100 is down. The DAX is actually doing pretty well here, 1.3 up. Australian dollar is up as well. And the Hang Seng, China is feeling the heat here, -6% pre-market. Well, actually, it's not pre-market for the Hang Seng, but they closed directly, like they dropped 6%, which is a huge decline here. Now, currency-wise, US dollar seems to be the strongest. It is up against all other currencies here. The yen is the weakest, apart from the Australian dollar here, which is lagging the way here. And the pound is also pretty strong. So maybe some optimism in the pound based on the change in government. We'll see if this holds any weight here. But for the time being, I'm going to maintain the overall bias of dollar domination, but keeping in mind that we are within a delusional rally here. But as I mentioned, I'd like to see this confirmation of breaking back below these key levels. I'm going to set an alert here. So breaking down the structure on GU now. On GU, let's go down to the daily. Start here. Now on the daily, we are within this range here, but measuring out the overall market structure here, we've created this low around 1.1405, this daily key level, this lower high, and this new aggressive lower low. Now we've been playing this bearish daily structure here, as when we pulled back to retest this zone, we had a strong rejection. However, bulls did not give up just yet, came up to retest the zone again, double top here, rejecting this zone. However, we are ranging at this point, but we're ranging below this daily key level. So on the daily time frame, we are still bearish. However, we have 1, 2, 3, 4, 5, 6, 7, 8 candles right now. So 8 days of price action closing within this range. So it's a little bit more indecisive here. On the 4-hour, we can see that it's quite a mess here. From the retest of previous structure, 1.09 area, we had some bullish structure form, right? The bullish structure form was retested, created a higher high, retesting the daily time frame bearish structure, rejected here, but again came down, created a little bit of a fake out liquidity grab, and now we're back up to the highs here. So it's quite a mess, but my trade ideas are as follows. I'm going to avoid trading within the range here, but if we come back up to this daily break of structure, this daily sell side liquidity zone, I'll be looking for sells at this area, and I'm not looking for any buys. Only going to look to sell if we break back below this important key level here, 1.18, breaking back below this range and could potentially reach the bottom of this range here, given that we potentially continue to break past below this price sensitivity area around 105. All right. Now, finally, gold. Going out, starting with the daily time frame on gold as well. Let's wait for it to load here. Okay. So the daily time frame is still extremely bearish, as we have been playing this bearish structure for a long time now, rejecting this previous sell side liquidity level 1728, come back down below these levels here to retest these lows here. We had a strong jump in gold from these lows, but it looks like we're rejecting previous liquidity levels, and we're back down within this messy area here. So far to start the week, both on GU and on gold, we're within messy price action ranges. So nothing's looking extremely favorable, but still continuing our analysis here. The 4-hour time frame is bullish now, right? So we have clear bullish structure on the 4-hour, as we had this bearish structure here into the lows, and this demand zone here, these wick rejections, rejecting to the downside again right at these lows, and having the impulsive spike to end the week continued over Asian session to retest our sell side liquidity zones. And we had this rejection here, but now we're retesting and sort of creating some support near these previous wicks, near these previous structure lows, and basically near these two key levels here, 1646 area. So even though we're bearish on the daily time frame, on the 4-hour we are bullish still. However, on the 1-hour, now we're seeing on the 1-hour we are bearish here from these highs, as we have created a series of lower lows and lower highs here. From this wick rejection, we've come down to create a low, try to create some support above this daily structure, instead failed to create any sort of buyer momentum, create a lower high, and sellers printed these new aggressive lower lows here. And even right now where we are sitting, it doesn't look like buyers are stepping in for the time being, as we have the 1-hour structure is bearish. So quite simple for today. I don't have any clear trade ideas, as on gold, my market structure analysis says that the daily time frame is bearish, 4 hours bullish, and the 1-hour is bearish. So there's no confluence here where we have a mixed sentiment, and for me, this is not. This indicates that we don't have great conditions to be trading here. So basically, in order to have some better conditions, I have to have two things happen. So either this 4-hour bullish structure holds, and then here I see the 1-hour structure flip, and then we have a new 1-hour higher high, a break of this pullback structure, and then I could see a continuation here. If this doesn't happen, well, then I'm going to need the 4-hour to flip bearish, the 4-hour to flip bearish here, and then continue the bearish trend. But right now we have this indecision, so I'm going to sit and wait, and it's only Monday, so I'm going to sit and wait to see what kind of sentiment we're going to see for the week here, and potentially if we do have this flip, well, ideally sells would be best below this key level 1645, 1646 area for the sells. So ideally buying back above this daily key level and selling below this 4-hour key level here. Right now I'm not going to be touching gold, And even GU, as I mentioned, I prefer selling at the top of the range here or below this key level. So nothing too juicy here on Monday. Just going to be sitting back and waiting to see if there's one sentiment that takes over. If not, we can just see messy price action, and it's best to stay on the sidelines in that case.